Emotional control and dealing with the uncertainty. In trading, even the most experienced of traders will tell you that it can be very hard to 100%, consistently and all of the time, control your emotions during a trade. That is definitely part of the psychology of trading. To be successful, you must learn to control your emotions. One of our traders, Crewdog, posted the following on our forum. Stupid emotions. With 4 exclamation marks. If not more. It's a very accurate term to define what can get the best of any of us. I'm so mad at myself right now. One of my problems recently has been getting out of trades when I see, usually small profit and not following my plan all of the way to my exit target. And this is what happened today. See figure 1.3 below for Crewdog's 1-minute chart. I got in at $33.18 with 500 shares for a 5 ORB, 5-minute opening range breakout, and as soon as my order filled, I was down $50. Damn. Didn't look at the spread. Well, the price dropped a bit toward VWAP, volume weighted average price, so I decided to add another 500 shares at $33.04, which brought my average down to $33.11. The price dropped below VWAP and I started to panic a bit. But it came back up and my unrealized showed $60 over break even, so I got out. The combo of the bad spread and the drop freaked me out, even though the 5-minute and even 1-minute chart showed that I was in an awesome spot. So, I told myself, I wasn't going to look at DBX again for the day. Well, like I always do, I came back later just to see what happened. Damn. Why? Stupid emotions. I was in such a good spot and the charts backed me up the entire way. I would have started getting out around $35.03. A damn $2 gain, and it's still climbing. So, a hard lesson. A lesson that I already knew but find hard to follow when emotions come into play. I can make bigger profits and lower losses if I follow my plan and don't let those stupid emotions get in the way. One way to help with this, that I found, is to remove the unrealized for each trade. To only follow the charts, level 2, and other signals. Not seeing $$ helps keep emotions in check. Sadly, I'm on a work trip and on my laptop using an old layout instead of my desktop where I don't show it. Should have removed it first. Oh well. I'll take my $200 and run for the day. Too emotional for anything else. One of our experienced traders and longtime members, Amen, had a look at Crewdog's charts and then posted in reply, "It could have been worse if we think about it. Imagine if it kept going down and down after you're averaging down the stock. You could have got with much more loss, but it went higher, which was unlikely then, I mean especially after it broke the VWAP, volume weighted average price. I would have done the same thing you did by the way. I mean, going long, then averaging, then it breaks the VWAP, which is usually a stop loss. Luckily the stock bounced back. Time to get out before it drops again. You did well going out, I think. Smiley face. However, looking at the 5-minute candle made it pretty clear that it's bullish. I face the same problem with realized and unrealized amount, and my scaling depends on the number written there. I'll try to disable it tomorrow and see how it goes. Thanks for your post. I've quoted from Aman earlier in this book. He is an air traffic controller who cannot mentally accept being stopped out from a losing trade because, due to his professional training, failure is not an option for him. I think some of his comments are worth repeating. I have been working as an air traffic controller for 23 years, and so I am programmed that mistakes can cost lives. Even if I provide not enough separation between the aircraft, there will be an investigation, interviews, filing reports. That is to be avoided at any cost. So I have really big problems to accept failure. Failure is not an option for me. Every time I get stopped out, I am sad that I failed again. I am angry with myself and I try to find the next trade, but I am still thinking about the missed opportunity. I have to learn to accept failure. There is no magic secret to success in trading. It is impossible For any individual trader or group of traders to be successful every single day, and yet that is what some naive and inexperienced traders seem to assume. And when they do have a series of losses over several days, they become discouraged and panic, and all of the careful planning they have put into their strategies is tossed aside. In trading, you accept a loss without questioning your strat. E.g., you make another trade, and you accept another loss, and in the third trade, when it works in your favor, you make sufficient money to cover your previous losses, if your user risk to reward higher than 1-3 in your strategy. That is why traders need to define positive expectancy. Positive expectancy refers to how much money, on average, we can expect to make for every dollar we risk on a given strategy. For finding the positive expectancy of your strategy, for example 5-minute opening range breakouts, you should collect a sufficient sample of trades under similar conditions. You perhaps will need 30 trades or more to prove that your strategy profits over the long run. For calculating positive expectancy, it is very important to be selective and not to include random trades which do not fit in your trade books, even if they are profitable. Those ones will give you a false hope or expectancy and could easily cloud your judgment in terms of your expectations for a given strategy. You may end up selecting or fine-tuning a strategy that you should instead be abandoning. Samir shared the importance of evaluating strategies based on positive expectancy instead of P&L, profit and loss. An invaluable skill I have learned from Andrew is how to find the few stocks during any given day that are most likely to behave in a non-random fashion and thus provide tradable opportunities by way of chart patterns. Limiting my involvement in the market, as an inviolable rule, to just these stocks during morning hours has helped to cut out many bad trades. Second, is the application of basic statistics to evaluate my own performance and the performance of strategies in general. I used to be glued to my profit-loss value when I should have been using the statistic of expected value to evaluate my performance. The reason for this is that it is impossible to diagnose and remediate bad trading behavior when a trader is only aware of their profit-loss. Even a profitable trader may not be able to articulate how they are successful if they are only aware of their profit-loss and may not know what to target in order to correct for periods of bad trading. The expected value ratio gives you a lot more information to work with as its value is relatively independent of your account size. I now concentrate on keeping a positive expected value for a period of time before I begin risking more money when employing a particular strategy or a new idea. The profit-loss value is also insidious in another way. At least for me, it has an incredible ability to pull at my heart strings, and it is one of the most significant influences, leading me to make irrational decisions. The ideal I am shooting for now is to test my merits as a trader based upon how well I follow my trading plan as opposed to my profit-loss value. This requires that, for each strategy, I develop a trading plan which takes into account all potential outcomes of a trade and stipulates the actions I will take for each situation prior to ever entering a trade. This is to safeguard against improvised decision-making, as I know quite well that if I were to leave any trade management decisions up to myself in the midst of an ongoing trade, my profit-loss value will lead me to make an irrational, emotion-based decision. If my past experience is any indicator, those decisions tend to be exactly the wrong decision for the trade. Trust in your system and your strategy is an important element of success. If you know me or follow me in social media, you will know that I am an avid climber and mountain. I often take my friends and family who have never climbed before to the mountains and try to teach them. I am always fascinated by their learning at the beginning. They are afraid, holding desperately to the rope or rock or whatever else might be nearby. I always tell them, I have you on belay, meaning that if you fall, I will catch you with my rope. They are still afraid, until they slowly trust me, my belay system, and the rope. Once they can trust the system, they slowly begin to enjoy climbing. As a climber, I need to trust my belay and other equipment, otherwise it is virtually impossible to Summit the mountain. As traders, we too need to trust the system. Trust in the uncertain career of trading is hard. Peter wrote, trust. Along with confidence, I found it's also important to develop trust. You need to trust in your ability to spot opportunities and take them. Once again, defining manageable risk enables you to trust in your trades. Lacking trust can mean that you fail to act on opportunities you find in the market. This can lead to missing out on the great trades as well as bad ones. It's okay to be uncomfortable. I've personally experienced a lot of discomfort on my journey to trading successfully. I've realized that I personally have always been uncomfortable taking a loss, and sometimes this means I avoided trades that turn out to be great ones. Now I'm developing a healthy approach to taking a loss. I also started to realize that it's okay to feel uncomfortable whilst taking a trade, so long as I have an edge and am trading according to my principles of good trading. Uncertainty. A trader has to operate within the realm of uncertainty. For some people this may be more difficult than others. I'm not somebody who is comfortable with a lot of uncertainty, so this has been difficult for me to work on. Initially it led me to feel that I wanted to control the market. I'd overanalyze and I'd follow many trading gurus online. I soon realized that many of the gurus as well as technical charting indicators do not have the answer and are often inaccurate or just plain wrong. Now I practice operating in uncertainty without the need for controlling anything but my entries, sizing and exits. I find I'm improving at this all the time.